Hello, traders. It's 8:03 a.m. Chicago time. It's odd. Okay. 8:03 Chicago time on Wednesday, the 9th of December, 2020. This is episode number 1895. Thanks for joining me this morning. Sorry about the delay. The perils of working with a free service like YouTube is that they really have no obligation to let me know when there are changes to how they do the broadcast. So I run into issues and I'm not able to test beforehand. So that's where we stand here with these delays. Sometimes it's my fault. Um, but we're looking at a market this morning that is risk on. Here's the summary sheet from Convergent Trading. You can find them at convergenttrading.com, and of course you can get this on Twitter by following Conv Trading on Twitter, twitter.com/CONV Trading. And if you set an alert on Twitter, it'll let you know when this sheet has been posted or anything else has been posted. So we see mild risk on. We're gapping up slightly. We're trading at the prior day's high. Overall, we see cash or money inflows to the indices segment up here at the top of this top left of the screen. The leader today is the DAX. The DAX is up 121 points. The DAX, of course, represents the German stock market, Deutsche Börse, and or some stocks in there. I believe, man, it's been a while since I've done a DAX index. I believe it's 30 of Germany's top stocks, Bayer, BMW, and so on. And then we see crude also taking a bit of a pop. So this is part of the risk on appetite. We're looking at gold dropping $9.60. Gold has been fluttering between 1840 and about 1920 for some time. Silver's off as well. Copper picking up. Copper is really kind of a contrarian when it comes to the metals. It's a key industrial metal versus silver and gold, which are more of a safety or a hedge product. Uh, Outflows from the 10-year note, the 30-year bond, and the euro bond. We're looking at today. We're looking for wholesale inventories at 10 jolts job openings and the Canadian interest rate decision. Cushing crude oil inventories at 10:30 Eastern. And then, of course, some of you have heard that there's a DoorDash IPO today. Uh, it's not included in the earnings because it doesn't impact any of the indices. But as far as key earnings, CPB, overnight status. Currently, overnight's at 144,000 versus 398,000, which is considered the edge of normal. This is quite low, actually. 140,000 is lower than the normal expectation of 190,000. 10 and a quarter points of range versus up to 50, which we would consider normal. And that number, by the way, that 50 is really dropping day by day. The overnight inventory is 100% long. We opened above the session close yesterday. Inventory is 100% long, and the market condition currently is balanced in the overnight session. So that's the summary of where we are. Let's take a look at what was expected yesterday versus what we actually got in our review segment. Looking at the review, remember the key prices yesterday from top to bottom, really, we're looking at 95, 85, 70, and 67. The primary scenario was looking for a pop higher off the open and then looking for it to revert back down into the 67. Secondary is a drop to 70 and a push to 95 in what is more of a trend day up. Scenario 2 has been playing out much more often than scenario 1 recently. And this is quite typical for a market that's pushing all-time highs. It's signaling, although it's giving us um, reasons for the trend up to come to an end. It's still signaling for exhaustion, yet it keeps going up. But that's why we respond to the market as it is, and that's why we have plans for either scenario, because it's just really hard to tell what's what. And so and so that's where that stands. So let's take a look at what actually happened. Here's what actually happened yesterday. We opened right up against the prior day's low. The prior day's low was 67, was 77 and a quarter. We opened up right underneath it, and then we pushed up into 87.50. Remember, 85 was an area I expected to turn at. There was a short setup right in here in the 86. Again, looking for that 85 area to turn. 85 right here. See the 85 right there. So I'm looking for scenario one. I'm looking for it to push to 85, turn over, and then test down into 67. 67 is the MC VPOC down here, and that's VPOC anyway. Um, can't spell this morning. MCVPOC. And I was looking for that to be the next test area. So was stalking short as discussed on scenario one. It went to 87, set up the 86 short, back to 77, the prior day's low, and we got tangled at 77, which was also the overnight point of control. The overnight point of control, the opening swing low, the prior day's low, and the opening price all stacked up right here. And the idea is it's likely to consolidate, bounce a little bit, and break through. And if it did, I'm looking for the 67. That's not what the market had in mind at the moment. I'm just simply explaining how that trade was expected to play out. And instead, we got this rotation, which was quite large. It became an impulse. We got this rotation that turned around and took out the IB high. At this point, we don't look for shorts anymore. We're above the open, above mid and VWAP, above the IB, and we've rejected a test below the prior day's low. So there's really no reason to get short, and it's all about finding your spot to get long in the trend yesterday. Not a fun trade. Again, this is hey man, this is all-time highs. It's crap trade. This is what we expect. This is a time to just chill and let things develop. It requires a lot of time. There isn't all that much excitement in the market. There's not much news to digest. Looks like the politicians are not getting anywhere with this COVID bill, expecting 916 billion, and it's not happening. And there's a stopgap measure to keep the government open through the holidays, and so it's the market doesn't have much to price here, and so we push into 3700. Once we break the 3700, we retest from above, hold the 99s, push to the 08. And then we just go completely sideways. And what we have here is a classic impulse flag, and then the expectation coming into the reopen is it would more likely to push higher, um, versus lower, and that's what it did overnight. So this carries us in our review segment to the overnight session. Let me remove the stock zones because they're not relevant for yesterday's session anymore. And here we are. We pushed into a new all-time highs to 37.14. I have a measured move target of 37.17. You can see how thick that measured move line is, or band is. There are three measured move targets that are hitting in that area between 37.16 and a quarter and 37.1775. centered around 37.17. And we are kind of pushing up against it and sitting sideways again. 37.14.75, new all-time high in Globex for the ES. The overnight session still light in volume, 145,000 versus 191 or so, and we have this really boxy overnight profile with a point of control kind of bobbing around among these prices. Not much to say about this other than the overnight point of control is right on top of the full session mid, full session VWAP, except expect a choppy open, and given the overnight volume and the lack of participation, we would have to expect that this would carry over into the day session. So this is another day where you really should chill and bide your time and kind of watch the market carefully. Look at this delta, just completely flat. It's currently negative, but only 610 contracts overall. Not much aggression on either side. The range on the delta is plus 1530 to negative 1118. So really not much directional bias here. We still have a naked point of control below us at 3702. We have the 3700 beneath us. We closed yesterday in the day session at 3701 quarter. And we have several single prints down here, areas that were poorly auctioned yesterday, before we get back into the meat of the balance, from yesterday. So double distribution profile yesterday, with a thin low volume node. And so today, if it does get back below the 3700, it's got potential for a run down to 87. If it does down into these single prints. This is the status right now. I know there's not too much to get excited about here. Here's what we are looking at in the big picture. This is RTH only, day session bars. And you can see yesterday it pretty much held the prior day's low. One-time framing is, you can argue that it's intact. It really didn't break below the low by much, and it pushed to new all-time highs on the day session at 3708. And so it's really we're in a grind up, and we still have this gap beneath us. We still have the retest of the 45 to 42 range down here. There's a lot to repair to the downside, and we're likely to do that into Christmas as we've done in prior years. We tend to wait for everybody to go away and have some pretty volatile days into the holidays. I'll be here this year to monitor as I'm not traveling because of COVID, as I do every year to see family. So I'll be here watching. Note that the delta has been okay, moving with price here. There's a little bit of there's a fair amount of support as the market moves up. We're seeing some aggressor buyers coming in and lifting things, and it's resulting in these grindy trends up. What are we looking for in terms of today's session? And by the way, thanks to all of you who answered the question yesterday, and tweeted about it and so on, about what it is you believe is keeping you from being a consistent trader. If I could wave a magic wand and lift the obstacle that's in the way of your being consistent, what would that what would that be? What would be the thing that you would want removed? And many of you said execution issues, FOMO, lack of a clear plan, planning but not taking the trades, and so on and so forth. These are quite typical issues for traders. So today we are opening in a gap higher. We are beneath the overnight point of control, full session VWAP and full session mid, looking for an open auction that tests higher, consolidates up here, and I'm looking for it to be responsive today down into this 3702. I'm looking for a test of the naked point of control and the prior close, potentially a poke through the 3700 into the 36.99 range, consolidate up here, and then start to drift later into the session, start to drift up. The potential here is for tests to the 17 area above, but not expecting too much on the buy side. I'm really looking for um, I'm really looking for it to be choppy early on, as I'd mentioned. So that's the primary scenarios for it to be responsive. The secondary is a market that is completely sideways, drifts down, gets into the overnight low, gets into the top of the prior range, impulses up, consolidates at the upper end of the overnight range, and then squeezes higher into 17 and consolidates before it continues on its merry way up to even more all-time highs. The next target up I have is 2750, but anything can happen between the 17 and the 27. I don't have anything in there. Those are the two main scenarios. Given the gap up into new all-time highs, we have scenario 3, which is a gap, test, and drop. So gap, test higher, open, test, drop in an impulse down, and then start working its way back and consolidating at these single prints in the various stock zone levels before it gets some traction. So this would be the scenario that tests the thinly traded zone in between the 99, 36.99 and 36.87. This would provide the highest amount of opportunities in terms of trading, but you know the market does what it does. We are in a grind up, and it is what it is. Good luck today, and hopefully you're gaining some measure of confidence coming in every day and comparing what I'm doing here with your plan. We're always looking to the left to help give us a better guess at what's going to happen to the right of the right hand, the hard right edge of the chart. Take care. I'll catch you tomorrow morning. Take care.